Hey, this is Justin with daytradethemarkets.com. Today I wanted to talk about 5 rules that you can use to identify higher edge breakout trades. I'll use an example from this morning. It's January 24th, just because we were talking about this on our member webinar this morning, and a few people asked me to make a video for it, so I thought I would share it with everyone. This is something that let me say it this way. Let me talk about a few things first. Number one, you have to realize that breakout trades are inherently aggressive. Okay, they're a high risk, high reward trade. In other words, when they work, they're great. There's nothing more fun than riding the momentum of a breakout train when it just takes off and you're on board. That's wonderful. The problem is they don't really work all that often if we're being realistic about it. In fact, if you just kind of take breakouts blindly, they're going to work about 30, roughly a third of the time. Okay, so that's kind of the first thing. Now, the second thing here is if you let me get this organized here. These are basically 5 rules or 5 pieces of evidence to check. Okay, the more of these pieces of evidence that are in line, the better the odds. It's still not going to be, you know. A situation where you're looking at like 90%. If you think that you can turn a breakout trade from being randomly, 33% chance to putting 5 rules in place and getting 90% of the time being right, I mean, you're mistaken. That's not how it's going to be. But what you can do is increase the likelihood of them working. So, rather than being, a third of the time they're going to work out, you can get it to 50% or a little bit over that. And for a breakout trade, that's really all you need. You can keep your if you are an inherently aggressive trader, not everyone fits this mold, but if you are an inherently aggressive trader, you don't need to win 90% of the time on breakouts because 2 or 3 out of 10 are going to make up for the 5 you lose, and then the 2 or 3 out of 10 that are basically break even. Okay, these are high risk, high reward trades. You don't have to be 90% on these guys, but if you can increase your odds, why not do that, right? So the rules here are actually pretty simple. It might seem a little complex at first, but they're actually pretty easy to understand. I'll try to go through them. But first, again, they're not always all 5 going to line up, but the more of these you have in line, the better. If you have 5 of the 5 and you're an aggressive trader that likes breakout trades, you've got about as best a chance as you're going to have on a breakout trade. If you got 4 out of 5, still pretty good. 3, you're pushing it. Just 1 or 2, I would recommend being careful, certainly. So first question you want to ask yourself, is this breakout trade with the big picture bias? Okay, that's something we know going into the day. Is this breakout trade occurring on a level 2, what we call a strong aggression, or level 3, what we call extreme aggression bar? So is there underlying buying or selling aggression that's going with this breakout? Okay, is the breakout breaking from a structure of some kind? That can be, in our parlance, a box, or it could be the higher low of the day, it could be a zone, a few other things it could be. But if it's breaking from something as opposed to just continuation of a move that's already started, that matters. Okay, now is the breakout reversing the other side's attempt at a reversal? I should say erasing the other side's attempt at a reversal. In other words, if you're getting long, is it taking out an earlier attempt by the sellers to find a high, for example? Okay, and then finally, we want to make sure that the breakout is not forming into an area of expected support or resistance. So there's nothing that we would expect on a larger time frame to be in our way. Okay, so if we think about it like that, so to give an example, let's look at this bar here. I think it was at 9:58 Eastern time. Yeah, 9:58 Eastern time in the ES today. Okay, let's look at this bar right here. Okay, and let's kind of take it step by step. Is the breakout happening with the big picture bias? Yes, it is. Big picture bias is up, and this is a long trade, so that's good. Is this breakout occurring on a level 2 or level 3 aggression bar? Yes, that's a level 3 or extreme buying aggression bar. So that's check 2, right? Is this breaking from a structure of some kind? Yes, it is. It's breaking to a degree from this selling box from earlier, okay? It's also breaking out of the earlier high of the day right here and the overnight high. So it is breaking from something. In other words, it's not part of a move that's already occurring, like say this bar would be, or like say this bar would be. Okay, it's breaking from something. It's breaking from the overnight high and the earlier high of the day and this red box, really. Okay, is this breakout erasing the other side's attempt at a reversal? Well, actually, it is, because we had this selling box that came in earlier here, and then the high of that selling box got tested, and we had what we call a box rejection, and then selling came back in. So this is a attempt by the buyers to break out. The sellers stopped it in its tracks and sent it down. This is what we call a box rejection. It's taking out that box rejection over here. Okay, So it's taking out the other side's attempt to move in the opposite direction, okay? And then finally, is this breakout not forming into an area of expected support or resistance? Now, we're on all-time highs, so there can't, by definition, be anything above there that's expected to be resistance. We don't know that it's going to go to the moon by any means, but we do know that it is, there's nothing standing in its way. So in this particular case, this doesn't mean it's going to work 100% of the time, but everything's kind of in alignment. In terms of if you're ever going to take a breakout trade, you've got things in alignment. You've got 50-50 or better chance that that's going to work out. Now, again, this didn't go to the moon. We don't know that at the time, though. Essentially, this thing kept going higher and then eventually formed a box, and then we had another box rejection over here. That can be a pretty good idea to get out at that point. But it's the idea that we have a situation where, you've got a pretty high chance of it working out. Now, I want to show you an example where it didn't work in just a minute. But let's look at, first of all, this next bar. Let's just look at this bar right here. Okay, this is at maybe 10:02 or 10:03 Eastern time. This is 10:02. So again, is this on with the big picture bias? Yes, that's good. Is it on a level 2 or level 3 bar? Yes, it's a level 3 or an extreme buying aggression bar. Okay. Is it breaking from a structure of some kind? It's really not. Okay. Yes, it's the new high of the day, but that was only 2 bars ago. We're not breaking from a box. We're not breaking above an earlier high or a zone or anything like that. So we don't have this one in this particular case. Okay, so we don't have that one. Is the breakout erasing the other side's attempt at a reversal? No, there's no selling or anything that we're taking out. So we don't have this one. Okay, now is the breakout into an area of resistance in this case? No, it's not. So that's looking pretty good. Doesn't mean you couldn't take this trade. It's just not as good as this one. And this one ran, 3 or 4 points, which I know is not the greatest move in the world, whereas this one really only ran about a point and a half, okay, before it backed off. So that's something to be aware of. Now, again, this doesn't mean that this is going to work every single time. Let's look at this one right here. This one is actually a really good example of a breakout that, quote, should work, okay? And I'm just saying this because this is real. Trading is not perfect. You don't have perfect examples all the time. But is this breakout with the big picture bias? Yes. Is this breakout occurring on a level 3 aggression or level 2 aggression bar? Yes. Is it breaking from something? Yes, it's breaking from this buying box that's already formed earlier, okay? Is it erasing the other side's attempt at a reversal? Yes, it's taking out this box rejection from earlier, okay? Is there any resistance above there we have to worry about? No, there's not. This looks pretty good. This is a trade that should work out most of the time. It's better than 50-50. This thing's going to work out. Or in other words, another way of saying it is probably a better way of saying it. It's about the best edge you can get on a breakout trade, even though breakout trades are inherently more aggressive or more risky than most other types of trades. Now, the great thing about this is we know pretty quickly this isn't going to work. A breakout trade should take off pretty quickly, and this one actually closes back inside of the box pretty quickly, takes it out. You can get away with a 1.5 to 2 point loss max on that trade. And again, if you took 10 of these trades and let's say 5 of them, on worst case, get stopped out for 2 points, 2 of them, go 7 points on average, and 2 or 3 of them go a point, 2 points, 3 points, you're coming out net ahead. Okay, but again, you have to be aggressive. You have to be this type of a trader. Okay, now what I want to also say this, and we talk about this idea a lot, when you have a situation that looks pretty good and it doesn't work, like we have here on the high of the day, this is a situation that at that time looked pretty promising. Okay, obviously it didn't work. Now, what does that tell us? When we have a situation when there's really good evidence and something doesn't work, you have to at least put your antennas up and say, that didn't go like I thought it would go. Logic would dictate that we better be looking out for the other side. And as we know from today, this thing took off and sold off pretty hard from there. But it's giving us a clue. I'm not saying that happens every time either, but I'm just talking about the market logic idea. When you have a pretty high edge set up and it doesn't work, it tells you to look out to the other side. It's kind of a secondary lesson. Now let me look at one more trade here, or one more option here. Let's look at this breakout here on the low of the day with this level 3 aggression bar, okay? So let's kind of take this rule step by step. Is this breakout with the big picture bias? No, it's not. We have an up bias, and this is a short trade, so we don't have that. Is this occurring on a level 2 or level 3 aggression bar? Yes, it's a level 3 or extreme selling aggression bar. It tells us there's a lot of selling, so that's good. Is this breaking from a structure of some kind? Yes, it is. It's breaking from both the earlier, low of the day over here and also the prior all-time high before today. So it is breaking from a structure. It's breaking out from something, okay? So we have that. Is this breakout erasing the other side's attempt at a reversal? Not really. We don't have any great buying that came in earlier over here, unless you go to the overnight chart. But looking at this chart, we don't have that. So we don't really have this one right here, okay? Now, is this breakout forming? It's not in the way of any kind of resistance. No, there's no or support in this case that's going to get in our way. So that one checks that box. So in this case, we have 3 out of 5. Now, that by all means, you can take that trade and it can work out. I'm not saying it won't work out. I'm just saying it's not as good of a breakout scenario as, say, this one was, or even this one, even though it didn't work, okay? Again, we're not going to be perfect when we're taking trades. We just want to put the odds more in our favor. This is a scenario where you're better off rather than taking the breakout. Doesn't mean you can't get short. We were talking about how definitely the odds were more in our favor to get short at this point, but you probably are better waiting for a retracement up toward a retest of the earlier all-time high and of the earlier low of the day. That's a better scenario than taking the breakout. So I'm not saying you can't get short there. I'm just saying that it's not as good of a high edge scenario that this thing's just going to take off vertically to the down. It's more of a situation where you can take it, but it's not quite as good as if everything was in alignment. So I hope that makes sense. To some people, that's going to sound like jumble. To some people, that's going to make sense, and that's okay. But this is how I look at the market. How I try to teach it is we can never be perfect. All we can try to do is put the odds more in our favor and try to make sense of the opportunity that exists and how good or bad that opportunity is, and then try to manage our risk accordingly. So hopefully that makes sense. That might be helpful. Hopefully it is. We will talk soon. Thanks.